All right, these are two tools that I use to help keep really my finances in check. And this is something that I recommend doing with you and your spouse. But the first one is the Word document. And this is what you want to do. You want to look at all your installment loans, like mortgages, student loans, personal loans. Write out what the balance is for each, what the interest rate is, years left, due date. And for your mortgage, write out what it's worth today. The reason why this is important is because I can't tell you how many people I talk to and I ask them, oh, what's your rate on that? And they literally have no idea. That's important to do. You're going to do the same thing with your credit cards, balance, interest rate, due dates, the date that they report to the credit companies. Usually you have to call for this. So this is different than your due date. Your due date is one thing that's here, but what's called reporting date. And whatever the reporting date is, so let's say the due date is the 15th, but they report on the 10th. You actually want to pay on the 10th because that's when they report the balance. Even if you pay it off in full, that's when they report the balance. So keep that in mind. Then we're going to get to your income and assets section. Income means write out what your income is, what your spouse's income is. And I mean to the penny, like if it's salary, what's your current salary? If you get bonuses or commissions, write that out. If you contribute to a 401k or 403b, write that out. And then write out when you get paid. Is it the 1st and the 15th? Is it the 10th and the 25th? Again, this just makes it super glaring in your face because once we sign those offer letters, it's easy to forget. And then your assets. How much is in your checking, your savings? What's the interest rate on your savings? This might make you laugh in today's world. Do you have an IRA, 401k, brokerage account, life insurance? This is a financial screenshot of your assets. And then this Excel spreadsheet is a tool that you can use just to help manage from month to month. And this first tab is what you call your balance statement. So if you have payments, let's say out of your checking account, write down what payments that typically come out, like CoServe or your utilities, City of Plano, maybe car insurance, maybe a car payment, your mortgage payment. Write out what the due date is. And then in each month, put in the dollar amount that you paid for that. And it'll keep an ongoing total for you. This also creates the habit of you going through your bank statements. And this is where you see things in your bank statement like automatic debits that you may have signed up for once a year and you had no idea. You will catch those if you're auditing your checking account. And I'm saying payments from checking because that's just an example. Maybe you make your payments from your savings account or whatever it is. Where you make your payments for your mortgage, water, things like that, that's what we're tracking here. And then I've also added like a personal credit card. So a lot of our clients, they will put these kinds of bills on their credit card and then they pay their credit card off in full every single month. So this would be like things that come out of your credit card. Maybe it's your gym membership, your cell phone bill, NCTA, if you have cleaning services, sum up what was total for the food. This includes groceries and restaurants. Some clients separate these groceries and restaurants just so they can see how much money they're spending on actual restaurant food, doctor's appointments, gas, entertainment, nails, hair, whatever it is, and you're tracking it monthly as well. This also creates the habit of tracking your credit card because sometimes we fall for the credit card scam of, oh, I'm going to use my card because I get points, and it can get a little bit out of control. So those will be here, and you can add to this if you have more cards or more checking accounts. But then you're going to track your deposits. So this was just an example of if you get paid on the 1st and 15th of every month, then you would write out what those are each month, and you'll get a feel for, here's my monthly incoming coming in, and here's what was going out, and were you in the positive or the negative? And if you're in the positive, that's where oftentimes I will come back to this sheet and say, well, dump some more money here based on what interest rate's the highest. So keep that in mind. I also have an assets tab down below. This is another thing that you can keep track of as far as assets go. So this is just an example. Let's say you have cash accounts, which would be checking and savings. At the end of each month, write down what those balances are. If you have retirement accounts, these are examples, then write out what the balances are, life insurance. If you own any real estate, same thing. What's the loan balance, current equity rate? And this is essentially like having your own personal financial statement. And keep in mind, the rule of thumb is you want to be saving 20% of your income coming in, but that's after your debt's paid off, not your mortgage debt, because mortgage is considered good debt, which is a whole nother video. But what people fall into is what I call lifestyle creep, where your income goes up, but your savings doesn't go up. So keep in mind, the goal is pay off your debt and then start saving 20% of every paycheck, and you'll be in good shape.